CPI, PPI, news, launch, new phones, new cameras, a lot of exciting news, and of course, oil that just breaks everything in its way. Are you ready to summarize or basically do our weekly summary? So come on, let's go. Hello everyone and welcome back to the channel. If you're new, welcome. And if you're a repeat viewer, thank you very much for putting your confidence in the content that I produce. And just a quick reminder, everything and anything that you see here is not financial advice. You should seek financial advice if you're looking for it. This is only for entertainment purposes only. Let's dive into how the major averages ended the week. So we had a red week. The Nasdaq down 0.5%, Russell down 0.17%, S&P down 0.16, and only the Dow Jones up a bit, 0.12. Still, year to date, the Nasdaq is outperforming a very, very good week, almost 39%. S&P up almost 16%. Russell is up almost 6%, and the Dow Jones up 4.4%. Bitcoin had a very solid week, gains of 6%, 5.7, Ethereum 6%. Year to date, Bitcoin up 59% and Ethereum up 36%. When we dive into the indices themselves, we can see utilities up 2.79%, then consumer discretionary, and at the bottom, we see technology and industrials. If we even dive in further, we can see gold miners outperforming this week with a 4.87% gain. Then the metal mining, and on the bottom we have the home builders. That seems from a technical perspective that they're breaking, and also semiconductors didn't have such a good week. When we look at our heat map, we can see different areas that are colored in red, technology mainly, and areas that are colored in green, which are the financials. All the rest are kind of a combination of red and green. That's from a heat map perspective. And if we look at our frequent, actually 16 stocks, not 17, we have Tesla gaining 10.4% and SoFi gaining 6%. And on the flip side, we have Netflix down 10%, mainly probably because of the news around Disney. We'll talk about that in a second. And SolarEdge, another red week for that stock. But this is the story of the week. Oil. Oil is on a tear since, mid-May? Beginning of May, where oil created a double bottom, which is a technical formation, around $64. It is now trading at $90, 50% gain over a course of almost 6 months. That is a true 4 months. True achievement for oil. Yes, we know how it's been done. It's very easy. The Saudis are reducing production, same as Russians, and that's how the price goes up. Basic supply and demand, but still, amazing gain. I believe that if you're inside, you should protect yourself. That's what I'm gonna do. And if I wasn't in oil, I would now wait a bit for it to cool down because I think it ran too fast, too high, and now it's in an area where it has a bit of resistance around 92. This is the yellow line that you see here, and it might come back to check support in around 84. And of course, oil impacts a lot of things. Look at the CPI, which came hotter than expected this week. August CPI, a gain of 0.6%. Although core, that's a headline CPI, which is going up for the last 2 months. But on the other hand, core CPI is still going down. The reason for that is because of core CPI excludes energy and food, and energy, as you can see from this table, gained 10.5 and 10.6% versus the rest. And by the way, because of all the rest that were very muted, that's why the market took the CPI in a very relaxed way. If you exclude the first 10 minutes that averages dropped, they gained back everything they dropped on Wednesday. And that is the main reason, because if it's only energy and we know exactly how to pinpoint, and I'm not sure we can solve it, but at least we know how to exclude it, then people kind of brushed it off. We also had the PPI this week. On the PPI front, you can see that August came in at a gain of 1.6% year over year, and you can see that month over month a gain of 0.7. Hotter than expected, but yet still at a point where the market can absorb that kind of behavior. And again, the reason for that is mainly because, if it's only energy, then you can keep on raising rates, but you're not really impacting not the Saudis and not the Russians. We skipped over the YouTube channel. So this is our YouTube channel, Stock Talk with Micha Stocks, where we have over 2K subscribers. You can invite your friends to see or to get or to enjoy a weekly summary of all the news, where I try to cover everything that happened this week, so you will be updated. Thursday night, UAW, United Auto Workers, went on strike. Two of their main requests. One, they want a 4 working day week, and they want a 40% raise. In that situation, both Ford, GM, and Stellantis are in very, very big problem. At least Ford CEO measured that if those are the terms that they will agree to, they're probably going to go bankrupt in a few years. So I don't know the idea behind those kind of requests. And of course, it's a negotiation. They come with a high number. The companies come with a low number. But when you come with a number so high and the companies come with a number so low, it seems like the strike was inevitable. And yes, they are on strike. On Friday, Ford actually even fired 600 people and reduced their headcount. All this in a time where EVs are being the chosen vehicle for people that are buying new cars, and the ones that are here on strike are mainly the ones that are producing the internal combustion engine, which is a big problem for them as well. ECB had a meeting this week. This is Christine Lagarde and the European Central Bank. They decided to raise the rate by another 25 basis points, but also signaled to the market that they're almost done, if not done. And the market took that as well as a good sign because she is very much coordinated with Jerome Powell. And Apple, we talked about the launch. So iPhone 15 Pro launched, iPhone 15 launched, new watches, a lot of excitement. Of course, pre-order now being pushed by dates, meaning that there's a lot of excitement, a lot of orders. Apple, very solid releases, not a lot of changes, trying to steadily keep the customers and just upgrade cycle by upgrade cycle by upgrade cycle. An ARM IPO was held this week. They sold shares before the IPO at $51. The stock went up, if I'm not mistaken, to around, let's see this on a weekly basis, went up all the way to 68.76. And from that point on, you can see it fell by about 11% and ended the week at a $60, bringing the PE to above 100 for a company that has declining revenue, declining earnings. Valuations are stretched. In this case, they're not even stretched. They're very ambitious, but the IPO was very successful, mainly for SoftBank that took the check back home. BMO, during the weekend, exits retail auto finance business. They feel that there's too much loans in the system, and they're risking themselves. A very difficult time for the consumer, at least from loans perspective. On the other hand, big banks, whether it's Bank of America or JP Morgan, even Capital One, says that the consumer is still strong footing. So go figure. This is BMO, Bank of Montreal. Mercedes and their EVs are not selling in China, and they're exiting China, at least for now. And basically all German brands currently have problem competing with the Chinese competitors. On the Mercedes front, it's quite interesting because we do see them here around in the US, but China probably a more difficult market. And on Salesforce front, Dreamforce happened this week with the launch of new products by Salesforce, and also a notification that they're hiring 3,300 new people making new investments. Of course, after they eliminated 8K jobs. But the highlight of Dreamforce, or actually the interviews, were not that. Mark Benioff, that him and his leadership team, and of course the HR team and others, are calling employees to come back to the office, to work from the office, to synthesize, to get all their values together. Why am I saying that in that kind of tone? Well, troops aside, management on the other side. Mark Benioff drops a bomb after calling Salesforce workers back on their desks. He says, I don't work well in an office. It just doesn't work with my personality. So I'm asking myself, if I'm an employee of Salesforce and I'm coming to my manager and telling my manager, listen, I don't work well in an office. It just doesn't work for my personality. Would I get a notice to pack my things and leave the office, or will I be promoted to CEO? That's not leadership, Mark. Sorry to tell you. Even if you don't work if you don't work good in the office, tell the employees that don't work good in the office to do the same. At least from my perspective. But I'm not the CEO of CRM, so I can say whatever I want. I'm just a character on YouTube. And this is Ron Allen. Ron Allen is proposing to buy ABC TV networks, local stations, FX, and National Geographic for $10 billion from Disney. The news, of course, was bubbling up in the last few days, and Disney stock went up because of that. And once it started going up, of course, Netflix, which would be the main beneficiary of Disney's decline, they kind of changed places. Disney went down about 10%, and Disney went up during the last week. Will it happen? I don't know, but definitely both interests are aligned on selling. And this is Gemini. Gemini AI is supposed to compete with ChatGPT 4, but we have Bard. Never mind. Google has Bard, now has Gemini AI. They're probably going to strip out Bard and keep Gemini AI. All this is going to be launched in the next few weeks. I can hint you right now, without a lot of knowledge, that a celebration of 1 year for ChatGPT is supposed to happen end of October, mid-October, end October, or beginning of November. One of the 3 dates, depending on what they decide. If I were Google, if I were Sundar Pichai, I would do that exactly on the same date. I would ruin that party. I would egg their house, meaning that's probably the date that they're going to launch what they're going to launch. But Unity had a very bad week, on the other hand. Why? They're changing their monetization and the payment that they're going to pay for creators and people that are going to use their coding platform, and also going to require different payments. So they're making a lot of monetization changes. Those monetization changes affect and created a very negative buzz for Unity as a company, for their CEO, and of course for the stock, which lost a few percentage during the week. How are they going to get out of it? It's a very difficult situation right now. A lot of negative sentiment against Unity. Good sentiment for recreation, reason, and others comes on the marijuana area, where finally there's a date, assuming that this time it's going to happen, where the key Senate committee is going to vote for the marijuana banking bill. And if that goes through, it means that a lot of action is going to happen in the cannabis area. We have seen that action in the last 2-3 weeks. Basically, people are buying the rumor, and once the vote would be in, they will be selling the news. And this is Atlanta Fed showing their GDP estimate for Q3. As you can see, we were in a very high number. We said we're in a high number. We said that the number is going to come down a bit, and it did come down. It came down to 4.9% this week. I assume it's going to come down a bit more, and I hope we're going to stay above 3%, which means healthy growth on a very difficult climate where you have high interest rates, but also an economy that is trying to avoid a recession. So we will see. Currently it's at 4.9%. And Warren Buffett sells a stake or percentage of HPQ after, and why am I mentioning that is because he acquired it April 2022. So even if you're a value investor or a long-term investor, sometimes you need to cut your losses. Since he acquired HPQ, or at least percentage of HPQ, the stock went down 19%, and Warren Buffett, even at 93, remembers that the first rule is don't lose money, and the second rule is don't forget rule number 1. And this is VinFast. We talked about VFS, the way it went up because there wasn't a lot of outstanding shares. Well, outstanding shares are coming out, and the stock is falling like a rock from the sky. The ticker is VFS. And Citi, the story of Citibank is the best articulated on this chart. This is Citi chart from Google Finance with a maximum time. You can see Citi, from a technical perspective, creating a double top around 545. From a value perspective, June 1st, 2007 was almost the peak for that stock. After that, it dropped like a rock from 542 all the way to $10. Now it's trading at $42.7, trying to do something with the stock price and with book value and everything. Currently, they're valued very low compared to their peers, and Jane Fraser is trying to fix that with a big reorg inside her management team. So that's Citi. And this is Eunice Yoon from CNBC that is reporting that Chinese are surprised that the West is saying that there are sanctions on iPhones and Apple. They don't know anything about it. It's a huge surprise. Who do you believe? That is the main question. And this is the Senate committee, or actually 100 congressmen that came in the office during the week and heard top CEOs of tech companies, whether it's Elon, Sundar Pichai, Jensen Huang from NVIDIA, Sam Altman from OpenAI, Alex Karp from Palantir, and more CEOs for a whole day that wasn't televised, behind closed doors, the risks of AI, the opportunity of AI. Zuckerberg was there, and others. All the big CEOs were there in Washington. And American Airlines and Spirit cut their summer profit forecast on higher costs of what? Of oil. You've seen that. It raised 50% by price. So yeah, it hurts. And this is the CEO of BP, Bernard Looney, who resigns after not being fully transparent on prior relationship. Apparently, he had an internal relationship with one of the employees and then reported, and I'm not talking about drinking beers with one another. I'm more talking about drilling, if you get what I'm talking about. And this is Binance US CEO that's leaving the company after a third of its staff has been cut as well. Why? Binance needs money. They're cutting their costs. And Amazon launches Supply Chain by Amazon. Basically, it's an end-to-end, fully automated supply chain services. If you want to launch a store on Amazon, let Amazon do everything. And according to Lina Khan from the FTC, a few years later, they're going to probably take that product from you, white label it, and that's it. And that's why there's also an open or a potential lawsuit against them from the FTC. And the last but not least, Disney and Charter, as of Monday last week, are back streaming. They got a discount, but mainly both companies lost. What did they lose? Disney lost money because they discounted. Charter created a lot of suffering for their customers, which won't rely on them probably in the future, only for the internet and using YouTube TV or Hulu or other streaming services to stream. Those were the news for last week. Let's talk about this week. This week is going to open Monday, but everyone's going to wait for Wednesday afternoon. 2 p.m. Eastern, we're going to get the new rate, but it's not going to change. At least the market currently speculates, at least 95% speculates that there's not going to be a rate change, at least not in this meeting. But it would be very interesting to see the dot plot to see what the other Fed members are looking at. That will happen on September 20. They are resigning from September 19 to September 20. We don't have any other special financial events on the calendar. Not special earnings except Stitch Fix, AutoZone, General Mills, FedEx, KB Home, and Darden maybe you might be interested in. And when we look at not oil crude, but actually the S&P, let's see if I have it open. Yes, the S&P, we're at a critical junction where the S&P lost the 50-day moving average. As you can see here, on Friday, it lost the 52. That's 1 day. It doesn't mean a lot. It might turn around and go back. But this, again, is another sign that we are weakening. As you can see, we were above the moving average from March all the way up. Then we dropped in a very orderly line from July all the way to August. We tried to recover a bit, and now we are in a formation of a downward trend. Everyone is looking at the 50-day moving average, and there are two levels that you should mind as well. If you're interested also from a technical perspective, around the 4,400 and 4,300, those would be very crucial levels for the S&P. If it survives them, turns around and keeps going up, then it was a correction and we can keep on going. If it keeps on dropping, we might find ourselves at around 4,200, which is a very steep correction from the 4,600 we were, which is almost 10% of a correction. That is everything I have for you this week. Tune in next week, and if you can smash that like button, that would be great. If you can share the channel, again, would be great. I will see you next week, next time, same place. Bye-bye.